Now, Hunter Ruthven, editor of Real Business, is with me here in the studio. Welcome, Hunter.
Thank you.
And the situation is clearly very uncertain in Greece, but things in Europe are a little bit more clear-cut. I mean, the meager recovery that the region has experienced over the last few months has slowed right down, and the specter of deflation has been descending over the region. Prices in the Eurozone have dropped 0.2% in December, following the 50% fall in oil prices since June. According to Oxford Economics, if oil prices remain at $50 a barrel, 18 member states, including Germany and the UK, could see negative inflation. I mean, the UK's position is we're on a tightrope right now, wouldn't you say?
I think it is a bit more clear where we stand with the EU and the UK as a whole. Obviously, the UK is one of the stronger economies, but there is a general need to get people and businesses borrowing and spending again. So it seems the discussions over quantitative easing have shifted from not if to when and how. But I think for something like that to happen, to have a big impact, we really need to go at it kind of full bore. They'll need to go at it hard. And there's a need to kind of share some of the risk across the contributing nations. And if we get all of that going, the confidence should pick up again. But I think now is the time to act. And if we don't get the economy moving, there won't be an incentive to spend and borrow, as it will always be cheaper to do it tomorrow, next week, next month, next year.
Just going back to the quantitative easing point, we obviously have resorted to that before in the past when things got a bit sticky. And a lot of people credit the UK recovery with an efficient use of quantitative easing. But it does seem that as we begin to slow down again and see low demand from all over the world, it does seem like a little bit of a quick fix solution rather than a long-term solution to all of the economy's problems. Do you think that quantitative easing can work in the long term?
I think it can work as a stimulus to getting longer-term plans moving. For these more ambitious longer-term projects to work, we need to get that early ball rolling, and I think quantitative easing can work quite well to get a quick injection of capital, that kind of thing, get confidence back up a little, get people spending, get people realizing that today is the time to act rather than putting things off.
Absolutely. So the UK has been recovering faster than the rest of Europe. Europe has been slowing down much quicker. What does this threat of deflation from the Eurozone mean for the UK in particular? Are we going to crash again off their backs?
I think one of the biggest problems the UK has right now is the imposing general election. It's one of those things, again, where nobody wants to take action now. They want to see how the business, economic, political climate will shape up for the next year after the election. So I think there will be a general feeling of let's wait and see what the next government looks like. Because of that, we probably won't get moving as quickly as we like. But the UK and the EU are inherently linked. There's a need to acknowledge that for businesses, for the wider community. So we need to work in partnership with Europe to make sure that those strong trading links continue to exist. The European community is a big market for small, medium and large businesses in the UK. So I think we need to take a proactive approach, but I don't think that's going to happen until we have a new government in place and people are more comfortable with a longer-term picture.
So the slowdown in Europe has been discussed a lot in the media over the past 2 or 3 months, actually, and it really does not seem to be getting any better. And combined with the sliding oil prices, it seems like the global economy, not just Europe, but the global economy is on a downward slope. Are we maybe heading for another recession?
I think it's probably a little bit early to say we're heading for another recession. I think, as I've said before, it's a case of acting now, getting big projects moving, getting quantitative easing moving. I think we will then have to look a few months down the line when things like Greece have played out, those kind of situations, and we'll have a better understanding for how the general purse of the European Union is looking, how happy parties like Germany are. Obviously got the ongoing situation in Paris, which will play out for a while and will serve as a little bit of a distraction to what's going on economically. So we kind of need to work through those different issues and come back in a few months' time with the whole general election, those kind of things, and take another look at the situation, I think.
Share Sunday. Your money, your business, your leisure time.
So welcome welcome back. If you're just joining us now, you're listening to The World This Week here on Share Radio. I'm Rita Lopo, and with me in the studio is Hunter Ruthven of Real Business, and we've been discussing the impact that the slowdown of the EU is having on the UK business. And why don't you join me too? Let me know what you think on some of the biggest stories of the week on Twitter at Share Radio UK, or follow me directly. I'm at SomeLikeItRita, or you can email us at weekend@shareradio.co.uk. And finally, why not follow our website www.shareradio.co.uk and register your details for a chance to win a Pure Evoke digital radio and be the first to hear all of the latest news here from the station. Now, Hunter, we were speaking about small and medium businesses a minute ago. A lot of the UK recovery has been off the back of these businesses that have been investing a lot of time and energy and money in getting things going again. There's been a lot of talk, make your New Year's resolution going into business for yourself. There's been a lot of encouragement of people to go into business for themselves. This slowdown will really put the brakes on that plan, wouldn't you say?
The small, medium kind of growing businesses really are the engine room of the recovery. There has been a lot of incentives help to get people starting those businesses, to get them growing quickly. And that needs to happen because they are the people hiring, they're the people exporting, investing, they are supplying the larger businesses, so they do play an increasingly important role. In the context of the EU, when businesses hopefully get beyond a stage where they've kind of saturated their local market, they do start to look at what different exporting opportunities can be, and Europe is a logical first step. And if that isn't there, if that isn't such a strong market to go into, then they'll either have to stay in a saturated local market, or they'll have to look further abroad to risky export markets where perhaps they don't have the experience, where perhaps they might get burned. And so we need to make sure that the European market is easily accessible for them. There's trade agreements in place, all those kind of different things. There's export finance. All of those incentives and help need to stay in place. For these businesses to go from these early entrepreneurial endeavors, which we all want to see, to the bigger businesses, which will also continue to drive the economy forward.
And of course, that's the crucial question that will be asked again and again between now and the general election, and that the Europe question and the election question are intrinsically linked because, so many parties are out there advocating the withdrawal from Europe, or, taking a step back, or renegotiating this, that, and the other. But in a sense, the small business owners, the people that are there working really hard, really depend on that relationship for their business to be able to grow. So, that is a key point to bear in mind. And at the end of the year, at the end of last year, Hunter, economists and investors said that despite a dip in construction output and industrial production in November, they were still expecting steady UK economic growth. Do you still see that as happening with the EU situation as it is?
I think there's still a feeling of confidence amongst the small and medium-sized business community. I think that won't last if other situations don't change. For the confidence to continue, we need to make sure that there is constant flow of debt finance, of equity finance. These businesses need help. So if we don't if we don't get stuff moving, then the confidence will drop away very quickly, and we could see what was the engine room of the recovery start to fade a little bit.
So the National Institute of Economic and Social Research has forecast that the output would rise by 0.6% in the 3 months to December, and that's lower than their original forecast of 0.7%. But in line with the average growth over the past 18 months, but it could potentially be pointing to a slowdown in the recovery in the UK, which is small, but small businesses had been some of the ones benefiting from this growth. Are small businesses going to start to suffer, really, despite their confidence that things are going to get better?
Well, small businesses need people spending, and if we don't sort out the situation in Europe, then people will be reluctant to spend, because of that thing about it's always going to be cheaper to do it tomorrow, next week, next month. So there will be a trickle-down effect of that for small businesses. So we need to make sure that small businesses have adequate protections in place. We need to make sure that they are taxed in a what you might call a friendly way to help them move through this difficult period. Because what we don't want is small businesses coming up against difficult situations and not having help, not having aid, those kind of things. And then if that does happen, we will start to see the further disappearance of the high street, things like that.
And do you think that these protections are in place at the moment?
I think they are to a certain extent. Every time we have an autumn statement or a budget address from the Chancellor, there are always small pockets of good news for small businesses in terms of business rate reductions, all those kind of different important contributions to how they run their business. So there is a really great support network. It's in constant need of improvement and upgrading, but I think the last government has been good about recognizing the benefit of small businesses and making sure that policy is being carefully tailored towards them.
And finally, you were warning us of the risks of how can I say this? The risk of adjourning our investments. Instead of doing it today, doing it tomorrow, doing it in the future. And of course, that is potentially a danger of falling into a trap of, a vicious cycle of never investing and therefore never growing. What can we expect in terms of that for the first quarter? It seems like everyone is bracing for more bad news and therefore holding their purse strings really, really tightly and not investing. How can we get people spending right now?
I think it will take a big influx of capital from governments. We need to see inflation rise. Otherwise, there will be that negative downward spiral. So I think the contribution of bigger EU discussions, looking at quantitative easing, looking at getting banks lending again, once we get all of those things working in harmony together, I think you will see rates start to rise. You will see people realizing that it won't be cheaper tomorrow, next week, or next year. And you will see a greater return to spending now and investing for the future.
Unfortunately, that's all the time we have for today, I'm afraid. I have been joined in the studio by business journalist Hunter Ruthven, editor of Real Business, and we've been talking about the biggest stories of the past 7 days, in particular Greece and Europe and how their slowdown will affect the UK. This has been The World This Week. Join us again next Sunday at 10 a.m.